Hi, this is Prasheel coming to you from Mumbai, and you're listening to the Equity Master Stock Market Wrap Up. In today's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. The RBI cuts repo rates. Crude oil is up 30% since January. Jet Airways is now the smallest operating pan-Indian carrier. And the IPO season is back on. So, a quick look at the broader markets first. Global markets rose on optimism over progress in US-China trade talks. The Chinese vice president said that a new consensus has been reached between China and the US on the text of a trade agreement that they are negotiating. US President Donald Trump said that the United States and China were a month away from a potentially epic trade agreement. Back home, Indian indices too ended in green amid global optimism. With the markets out of the way, let's look at the key stories in focus today. The RBI's Monetary Policy Committee, led by Governor Shaktikanta, announced a 25 basis point cut in the short-term lending rate, also known as the repo rate or repurchase rate, in its first bi-monthly review of the financial year 1920. The repo rate now stands at 6%. This was the second back-to-back rate cut by the 6-member MPC ever since Mr. Das was appointed as governor, and 4 out of 6 MPC members voted in favor of the rate cut. The move also makes India the only country in Asia to have cut the rates twice in 3 months. Speaking of the RBI rate cut, if we speak of companies growing with high leverage, the RBI's recent rate cuts have come as a big breather to such entities. But data from the BSE 500 index shows that businesses that have debt over 1x equity contribute just 20.7% of total sales. Businesses that have debt between 0.5 and 1x contribute 15.4% of total sales. Therefore, the rate cut, which is believed to be a stimulant for the economy, will really benefit the companies that contribute just a third of the total revenues. Do keep this in mind when you weigh the impact of the rate cut. Moving on to news from the commodities market, crude oil is silently creeping up. While the Sensex is hitting new all-time highs, nobody seems to notice that the Brent crude is already up 30% from the beginning of the calendar year. Crude oil prices are near 2019 highs, supported by supply cuts led by producer club OPEC. Reportedly, US sanctions against oil producers Iran and Venezuela are also boosting prices. Last month, the OPEC scrapped its planned meeting in April, effectively ending supply cuts that have been in place since January until at least June, when the next meeting is scheduled. The OPEC and non-affiliated allies such as Russia, known as the OPEC Plus Alliance, have been withholding around 1.2 million barrels per day in crude supply from the start of the year to lighten the markets and prop up prices. Meanwhile, US crude oil output has soared by more than 2 million barrels per day since early 2018 to around 12 million barrels per day, making America the world's biggest producer ahead of Russia and Saudi Arabia. Moving on to the latest in the Jet Airways saga, Jet Airways continues to remain in focus as the debt-laden airline's domestic operations now comprise of just 12 to 15 planes, making it the smallest operating pan-Indian carrier. Note that Indian rules say that an airline must have 20 aircraft fleet and 120 domestic flights to fly international. And as Jet's operations are still continuous, Jet is undoubtedly flouting these norms. A government official recently went on to say that Jet's curtailment of operations would be revived over a period of 3 months before taking a call about the future of the company. A senior executive at Jet said that there was a grandfather clause which protected the percentage of international flying rights once the airline had been proven itself eligible for such operations. In addition to grounding a majority of its fleet, Jet defaulted on Indian and overseas loan repayments, vendor dues and salaries, and has laid off multiple people. Reports state that the total number of planes grounded because of default in lease rental payments stands at 69. Banks, which have now taken over operations of the airline, were to release an immediate additional debt funding of 15 billion rupees for Jet to tide through and part pays vendors and employees. However, the said funds have not yet been released. Moving on to news from the IPO space, the initial public offer of Polycab India hit the markets today. Polycab India is engaged in the business of manufacturing and selling wires and cables and fast-moving electric goods under the Polycab brand. According to Crisil Research, Polycab India is the largest manufacturer in the wires and cables industry in India and provides the most extensive range of wires and cables in India. During the financial year 2017-18, that is FY18, the company had a market share of approximately 18% of the organized wires and cables industry and approximately 12% of the total wires and cables industry in India, estimated at 525 billion rupees based on manufacturers' realizations. To get a detailed view of the Polycab's India IPO, you can read Ankit Shah's latest note in the Equity Master Insider. Speaking of IPOs are back in business. The last week alone saw 3 new IPOs coming up. Now, how do you decide which IPOs to subscribe for and which IPOs to avoid? We here at Equity Master believe that a merit-based selection, primarily including valuations, business, and management quality, is the logical way to go about investing in IPOs. If it means going against the herd, so be it. And going by the recent past, this strategy has been proven successful more often than not. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you would like us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Happy investing.